All right, let's talk Ford. Is the stock about to break out or break down? That's the big question. We're going to dig into a technical analysis report to see what the signals are telling us. Let's jump right in.
So this is really the heart of the matter, isn't it? Ford has had this fantastic rally, and now it's kind of just stuck. Is it about to blast off and soar higher, or are we looking at a pretty steep drop? It's like a classic market mystery, and the charts have all the clues. Our job is to piece them together.
Okay, first things first, let's get our bearings. The report we're looking at is based on data from October 18, 2025. And on that day, Ford closed at $11.92. So, everything we talk about is anchored to that specific price.
Now, let's put that number in perspective. Over the last year, the stock's been as low as $8.44 and as high as $12.80. So, at $11.92, you can see we're way closer to the high than the low. That tells you there's been some serious upward momentum. But, and this is the big but, is there enough gas left in the tank to keep going?
And that question leads us right here. After that big climb, things have, well, they've stalled out. The report calls this short-term consolidation. That's just a fancy way of saying the stock is taking a breather. You can almost picture it like a tug-of-war between the buyers and the sellers, and right now, nobody's winning. The market's just holding its breath.
Okay, so let's dig into that tug-of-war. First up, let's hear the case for the optimists. This is the bull's corner. All the reasons why Ford might be getting ready to charge ahead.
One of the first things bulls look at are moving averages. And really, they're just what they sound like, the average price of the stock over a certain period. Maybe 5 days, maybe 200. It just smooths out all the daily noise. And the general idea is super simple. If the stock's price is above those averages, that's a good sign. It means the trend is healthy. And would you look at that? For Ford, the report shows the price is trading above all the key moving averages, the 5-day, the 20-day, the 50, and even the big one, the 200-day. That is a really strong bullish signal. It's like getting a thumbs up across the board, from short-term to long-term. A clean sweep for the bulls on this one, for sure.
But wait, there's more. The bull case isn't just about moving averages. We're talking about its position in that 52-week range. It's sitting in the 80th percentile, which is pretty darn strong. And look at the volume. A lot of shares are being traded, which suggests that people really believe in this price. Even some of the more complex math, like linear regression, is hinting at more upside. So lots of green flags here. Okay, I've got to admit, that's a pretty convincing argument from the bulls. But like we said, this is a tug-of-war. So now, it's time to hear from the other side. Let's step into the bear's corner and check out the signals that are flashing red.
And the first big warning sign comes from an indicator with a kind of a funky name, the MACD histogram. All you really need to know is that it's a momentum gauge, and it's pointing to something called negative divergence. This is a huge deal. It's basically when the stock's price is still high or even climbing, but the energy, the oomph behind that move is fading fast. It's a classic sign that the rally could be exhausted.
And check it out. The report calls it out directly. It literally says the MACD signal is bearish, negative divergence. So even though the price itself looks healthy, this little indicator is in the background whispering, hey, be careful, this thing is running out of gas.
And the case for the bears keeps building. The report gives Ford a momentum score of just 17.9 out of 100. That is not good. Price acceleration is negative, which means not only has it stopped speeding up, it's actually starting to slow down. Then there's something called the VWAP, which is hinting that sellers are starting to win the battle during the day. It's a total contradiction to all those positive moving averages we just saw.
So, what do we have? A bunch of really strong bullish signals and a handful of really clear bearish warnings. You've got two powerful forces pushing against each other, and what happens? A stalemate. And that's precisely what the next set of data shows, a market that just can't make up its mind. Take a look at the RSI, the Relative Strength Index. It's a gauge to see if a stock is overbought, meaning too hot, or oversold, meaning too cold. Anything over 70 is hot, anything under 30 is cold. And Ford, it's sitting at 53.03. It's not too hot, not too cold, it's just right there in the middle, the absolute definition of neutral.
And it's not just the RSI saying this. You've got another indicator, the ADX, which is basically a trend strengthometer, and it's screaming weak trend. The Bollinger position, that's also pointing right to consolidation. All these different tools are telling us the exact same story. The trend is on pause, and the market is just coiling up like a spring, waiting for a reason to move.
And you know, there's one more piece to this puzzle. The report points out Ford's low beta. All it means is that historically, the stock just doesn't swing around as wildly as the rest of the market. It's a more defensive, steady kind of stock, which, when you think about it, fits perfectly with this whole story of indecision and consolidation, right?
Okay, so we've laid out the bull case, the bear case, and the let's just wait and see case. It's a total mix of conflicting signals, so after sifting through all of this, what does the analyst who wrote the report actually think you should do? What's the final call?
So, the million-dollar question. Who wins this epic tug of war? The bulls or the bears? Let's see what the final verdict is.
And it's a split decision. For the very short term, like the next week or two, the official recommendation is hold or neutral. And the reasoning is exactly what we've been talking about. The good stuff, the moving averages, is being completely canceled out by the bad stuff, like that weak momentum. But if you zoom out a bit to the 1 to 3 month horizon, the outlook actually turns mildly bullish, banking on the stock's proven strength over the past year.
You know, the report even gives a specific game plan. It boils it all down to this single quote: buy on dip to 1176 support, target 1205. That one sentence perfectly captures the whole story, right? It acknowledges the risk of a small drop, but points to a potential buying opportunity for anyone who sides with that longer-term bullish view.
So if you're going to remember just one thing from all this, let it be this. Ford's stock is perfectly balanced on a knife's edge. It's in a state of equilibrium, just waiting for some kind of catalyst, news, earnings, whatever, to finally knock it off the fence and pick a direction.
And that really is the ultimate cliffhanger, isn't it? The charts have done their job, they've set the stage, all the tension is built up. The only question left is what's going to be the spark that lights the fuse? And more importantly, will it send the stock soaring with the bulls or tumbling down with the bears? That's what everyone is waiting to see.